The Fed just cut for their second time in a row, 25 basis points. And now we're coming to the end of the year, right? We have the December Fed meeting, and it seemed like there was still a high probability that they were going to do a cut. I've heard now, since the jobs numbers finally came out after the shutdown ended, we got some jobs numbers, and they were a little bit stronger than people expected. I think those were September's numbers. I don't believe we have October's numbers yet, and they'll probably come out when we get the November numbers, is my understanding. So where are you at today with a December rate cut? What are your thoughts on that?
Yeah, if you ask the market, it's really bounced around. We went from virtual certainty, basically 100% priced in to, what was it, 2 days ago, 3 days ago, it was only a 34% chance of a December rate cut. And then today, if I look at the futures contract, it's actually at 82% priced in. So I think the market's accepting the fact that it's probably going to happen in December.
Wow. So we went from just a 30% chance a couple days ago to 80% chance as we record this here today.
Yeah. You had some of the retail sales data, you had the ADP employment data, we've also had data being delayed due to the government shutdown. So you've had a lot of different things, and the market was blind, kind of operating blind. So what did they do? They listened to the Federal Reserve members, and a couple came out saying, I don't think December is on the table. And the market panicked and said, hey, maybe there isn't one in December. And then you get a couple days later, you look at, the ADP report saying, job growth really isn't there. And a couple other reserve members say, hey, I think we have to do December, and now we just swing the other way. So we're getting these big pendulum slings, a lot of it due to the government, shutdown and the lack of data out there.
Interesting. You were sharing with me before we came on here live that there is some futures data that kind of shows what is predicted as far as these Fed rate cuts. Would you mind bringing that up and kind of talking us through what the market has priced in? Because I think this is something that people forget about, is that the market's already kind of decided what it thinks is going to happen. And oftentimes rates are already reflective of what you see here in the futures numbers. And then that's part of the reason why sometimes when the Fed acts, if he doesn't do what's expected, even though it seems like it should be a good thing for interest rates, if the market was thinking something different was going to happen, it can have a very positive and or negative impact. So let's look at what the market's predicting as we sit here today.
Yeah. So when you hear me say things like 80% priced in, there's real data and there's futures contracts that's traded based on that. So if I were to go into a system like Bloomberg and look at the current futures contracts for future Federal Reserve Board meetings and what those implied interest rate futures say, we can actually do the calculation. And thankfully, a tool like Bloomberg does the calculation for us. So what I can look at is, all right, our effective Fed funds rate today is 388. If I go to the December 10th meeting, it's letting me know that that contract is priced at 367, an implied rate reduction of 21 basis points or 20 and a half basis points. Well, that would imply that it's an 82% chance of a Fed interest rate cut of 25 basis points. And that's how you get the probabilities that I just stated to you. And you actually can go out into the future and look and say, okay, what about December of 2026? What's the market telling us? So if I go to the 12/9 meeting in 2026, it's implying that the Fed funds rate is going to be 94 basis points lower than today. So what is that? That is almost, 2.9%. So that's how much is priced in. So a lot of times you'll hear LOs, you'll hear news articles say, hey, the Fed just lowered rates, and then LOs will scratch their head going, the Fed just lowered rates. Why aren't mortgage rates getting better? Why are they potentially getting worse? And it all has to do with it's already priced in. So what's the market now expecting future changes are going to be versus what's already priced in?
Oh, yeah, that makes sense. I don't think I've ever seen it illustrated that way, Jason. That's very helpful. I appreciate you pulling that up.
Yep.
All right. So at this point, we're a day or two before Thanksgiving as we're recording this. We'll definitely get this episode out before the Fed rate cut. But, these numbers might have changed a little bit, but just know that they're changing every single day. But as we sit here right before Thanksgiving, looks like 80% chance of a Fed rate cut in December. So let's see if that plays out. Okay. So let's talk about the government shutdown. It went on for a long time. It's over. I mean, in my mind, it's over. We've moved on. But is there, long-term impacts do you think of the government shutdown? Is there anything you could think of with that government shutdown that's going to have an impact on either, equities markets, bond market, our markets in general now that this is over? Or is it kind of one of these things where, hey, we've solved it, at least for now, it sounds like, and things should kind of go back to normal?
Yeah, I would judge this shutdown as something as kind of going back to normal, although it was a very long shutdown. If you looked at the pain point, it was around this continuing resolution, basically like, hey, we've decided we're going to spend this amount and we're going to spend this amount. And so the shutdown was just kind of the semantics of that. There's a lot of posturing from both sides. I won't pick sides, but really from an economic standpoint is, okay, the government got refunded. The money that was expected to be spent is now spent. So that money is now in circulation. So it's not like it's caused harm. There's no artificial kind of benefit to the economy. There's no artificial harm come, from the shutdown. So it's just back to business as usual. It's just a market disruption.
Cool. All right. Well, that makes a lot of sense.